Good evening everyone, welcome back to the channel. It is COPT here, and today I'm going to be showing you all how I traded last week and how I traded on NFP. First of all, I would be doing a breakdown on how I got my buyers and how I confirmed these buyers and how I took a trade. So first of all, this is gold XAUUSD, and I build buyers using candle rejection and candle closure. What do I mean? I'll show you. Now, going into the new week, I saw price had rejected this key level. This is an open close key level. This is an open close key level, and as you can see, price rejected it and closed above it. So based on this rejection, my buyers going into the next week, which was this week that just ended, is bullish. Then I don't just wait for the confirmation, I also get another buyers on the daily time frame. So me going into every new week, I usually have two buyers, one from the daily and one from the weekly time frame. And looking here, we saw that price rejected a bearish A-shaped key level. A-shaped key level is also known as, is also a resistance level, so we use it for, I use it personally for taking sales. So you can see price rejected this A-shaped key level. So now going into the new week, I know on the daily time frame I would also be expecting sales. Like my buyers on the daily time frame is to take a sell, while my buyers on the bullish time frame is to look for buys. But just because we have a bias does not mean I should just, immediately the market opens, I should just start taking buy or sell trades. I would have to wait for price to confirm those buyers. So let's remove this and let's see how price delivered across the week. Now remember, coming into this new week, I had a bullish bias on the weekly time frame. Now look at this, I confirm my bias on the 4-hour time frame using a bullish breakout. Now this is a bullish breakout. This is the start of the new week, which was on the 5th of January 2026. We saw price broke above this and price pulled back into this breakout level. Now if you look closely, this candle is a bearish candle, and whenever I have a bullish breakout, I want to see a bearish candle pull back into that range before I start looking for buys, because I call this a proper pullback. Then the next candle, which is here, I will be looking for buys. I'll be looking to take buys. Now if you drop to the 1-hour time frame, this is what you see in that new candle. What do you see? You see that price, there was a bullish breakout. I call this a long bullish breakout because of the range it took to break this level, which I call a breakout, and I would be entering here. So for the long bearish breakout, I will enter here. I have a name for this type of entry model, and this is where I'll be taking my buys, but I didn't take this trade. Now I'll show you why. Let's delete this and let's go back to the 4-hour time frame. Now in the 4-hour time frame, we saw something happened. This was a bearish breakout. Now this confirmed my daily bearish bias. Remember, entering the new week, we had a bearish bias on the daily time frame, a bullish bias on the weekly time frame. So this bearish breakout confirmed the daily bearish bias. So after the breakout, we had a proper pullback, which after the bearish breakout, we had a proper pullback, which was a bullish candle. So I'll be looking for sell in the next candle after the pullback. So I dropped to my 1 hour time frame, and this is what we had. We had this breakout here, and this was my entry. And I'll start getting this low. Now price had already swept to the low, but it was where I wanted to take profit from. So I took an entry at this level, this place. This is an A-shaped key level. If I enter the line chart, you will see that this shape looks like an A. This is how we call it, the A-shaped key level, and these ones are your V-shaped key level. So this is where I'll be taking my sales. This is where I took my sales from. And just like that, that was how I won a 6-hour trade. And as you can see, this bullish breaker that we had earlier on before, that I should have entered here. The reason why I didn't take this trade was because price had already ignored this level, and then we had a bearish breakout. So this one was forming recently. At that time, this happened on Wednesday, so I took this one, and then price mitigated this V-shaped key level. As you can see, this is a V-shape. If you go to the line chart, you see there. And so I could have entered here, but I didn't. Instead, this was what happened. Now let's drop back to the 4-hour time frame. Remember, we have a bullish bias on the weekly time frame. Look at what happened. We had a bullish breakout here, and if you look closely, you see that we had a proper pullback, which was a bearish candle pullback in a bullish breakout. This was a bearish candle, so I would be looking to take buys here from this next candle. And if you drop to the 1-hour time frame, you see that there was a bullish breakout here, quite similar to the first one, because I'll call this a long range, because the range between this place and the breakout is quite long. Now there are short breakouts. I also use those. I have 3 entry models, but whenever I see either of them, I take the trade, and if I don't see, I ignore the trade. So I'll take the entry here, and my stop loss was at this 4-hour breakout level, and it was a 1:6 trade. Same thing with the short I took. So it was this one was 1:6, and this was the NFP trade, which was good. It was a good week on gold last week. Now I also want to show you something, a trade I took on GBP AUD. Now this trade, it was a good one, but it was a mistake I made. Now let me show you the mistake I made. Let's do the same thing I did on gold. Let's derive bias. As you all know, same thing I said before, I'll say it again. I derive bias by using key levels, how price rejects and close after reacting to a key level of the previous weekly candle. So this was the previous weekly candle before the new weekly candle, which I'm covering, which I'm using bar replay to hide because I want to show you how I derive my bias. So as you can see, price rejected this, price rejected it and closed below it. This is a V-shaped key level. It's a V-shaped key level, a bearish V-shaped key level. Normally V-shaped key levels act as supports, but as you can see, this one has been invalidated. Price broke below it and now it is acting as resistance. Price rejected it and closed below. This tells me that entering the new week, I'm bearish on my weekly. I'm bearish on the weekly. So now if you look at the daily says quite the opposite of what the weekly was saying. You can see here price rejected the V-shaped key level. Like I said before, the V-shaped key level acts as support, which means it is used for taking buys, and price rejected it. This tells me that entering the new week on the daily time frame, I am bullish. So I have two bias. The weekly tells me bearish, the weekly tells me bearish, the daily tells me bullish. No need to panic, because having just a bias does not give me the right to just enter the market and take any trades. Does not mean I should just press any button, either buy or sell. I wait for price to confirm this bias. So what do? I drop down to the 4-hour time frame and I wait for price to confirm this bias. Now look at what happened. Let's look. Price, this is a bullish breakout. Bearish. Wait. You can't call this a bullish breakout because, or a break of structure, whatever, because for price to really confirm that it is bullish, price has to trade above this. This is just an internal structure between this low and this high, so I can't consider this as a bullish breakout. So what I waited for price to do whatever it wanted to do, and we had a bearish breakout. This validated the weekly bearish bias and we had a proper pullback. Then the next candle is where I'll be looking for sales. Now I have a rule for where I keep my stop loss, and this was where I messed up, and this happened on Friday. NFP. Normally, as you can see, this is a liquidity sweep and we had a breakout here, and this was liquidity here too, and that was my entry. Now normally my stop loss should be at this high while I'm targeting this low. But this is where I messed up. I didn't obey my stop loss rule and I got punished for it. Same way, if a trader is not disciplined to his system or his edge, he usually gets punished for it. Instead of putting my stop loss here a little bit above this high and targeting this low, this is what I did. I kept it here because I was trying to have a more increased RR. Instead of me following the plan, I was excited about the RR and I failed to stick to the system. Now I've learned my lesson. So the system is simple. It is, like I said before in the last video, it is bias, confirming the bias, and entry model, and just entry. whichever of the three entry model I see there. So that is for today's guys. If you learned something, drop a like and a comment. Thank you. See you all next week.